presentation.
Sir, I'm sharing that one.
Ms. Samriddhi Mehta is sharing the presentation.
Right.
Excuse me, sir, please begin.
Okay,
Jignesh,
thank you,
sir.
sir. Yes, sir. Madam, can you please share your screen?
Sure, sir.
Okay, so before that, I would just like to introduce the two distinguished personality. So dear students, we have prominent and expert speaker in the field of finance, Mr. Pawan Buch, the financial planner, regional manager investment at ICICI Securities Limited, and Ms. Samriddhi Mehta, regional manager marketing ICICI Securities Limited. So I welcome you on behalf of Paru Institute of Commerce and Paru University. So for further proceedings, I would like to hand over this sessions to Ms. Samriddhi Mehta. Please, ma'am.
Yeah, thank you, Jignesh sir, and hello and welcome to all the participants present over here. My name is Samriddhi Mehta and I'm a marketing manager working with ICICI Securities Limited. So today we have arranged this session for you because we want to give you insights of live market, that how it works. How probably you can go ahead with the practical approach while studying theoretical knowledge from your faculties from the college. So that's why we have invited an expert himself, Mr. Pawan Buch. He is having 20 years of experience in financial sector across, with passionate about financial planning, mutual funds, PMS, bonds, and investments. So I just want you to participate in the session. Throughout the session, I mean post session, we have arranged the Q&A round as well. During this session, you can also ask your query related to any particular topic or subject or real market knowledge if you won't have any kind of questions. So you are free to ask. I just request you all to put yourself on mute during the session. So it will be great. And I just need maximum participation also. Post this session, we are having a participation certificate. So if you will attend this session nicely, I mean throughout the session, you will share your activation. So we'll give you a participation certificate, which will help you in future prospects. So without taking much of your time, I'm just inviting Pawan sir. So he will address you for today's webinar. Thank you. Over to you, sir.
Thanks, Samriddhi, and thanks, Mr. Jignesh, for the kind words. So, good morning to all the students. And it is always a pleasure to, yeah.
Sir, can you please make your video on?
Okay.
Okay, yes. Now you're visible, sir. Thank you. Sorry, sir, for your interruption.
No problem. Yeah, so very good morning to all the students, who have taken their time out and are attending this session. And it is always great interacting with young minds. And I can tell you from my experience, as Samriddhi told, I have close to 20 years of experience. And you would have read in so many articles, or you would have read the names of investors like Warren Buffett, or closer to home, Mr. Junjunwala or Mr. Damani, so to speak. So the underlying is that the underlying in all these personalities is to take that first step, okay, and take that first step now. So today also, when I meet clients and they say, should we wait? Should we wait for the right time to invest? So there is, I would say, from my experience, time and again, there is no right time to invest. You have to start now. Okay, so that is the first basic principle which I would say based on my experience. And through this session, I aim to provide you an insight as to why I am saying so. Okay, throughout this journey, I also have made a lot of mistakes. Uh, so based on that, I would say that the biggest mistake would be that there could be two mistakes which you could do. One is that not starting, and second is if started, then stopping along the way, right? So we will delve into the reasons why it happens. Okay. Uh, Before we go on to the presentation, I would just like all of you to do a uh, small Google exercise, if I would say. So जो भी आपका year of birth है, whatever is your year of birth, so you would be I presume the millennial kids, and born after 98, 2000 or so. So just check in your year of birth, what was the Nifty level and what was the Sensex level. So you would be reading in your textbooks regarding capital markets, Nifty, Sensex, and all those things. So if you would check that what is the Nifty level in your year of birth, and the Sensex level in your year of birth, and what is the Nifty and Sensex level now. Okay, so just do this small Google exercise, and uh, you will be amazed to see the growth which has happened. Okay, so the bottom line is that if a economy has to grow, if a country has to grow, if a company has to grow, uh, they have to have public participation in their growth, and that public participation is essentially the stock market as we call it. Okay, so ultimately what is stock market or Nifty or Sensex? It is all about companies who are listed. So when a company starts, it is generally started by an entrepreneur, and who has an idea of Sorry, I received a call. Am I audible?
Yes, sir.
Yeah. So, so, so I was talking about that a company starts. There is an idea which the entrepreneur feels that it could change the world, and he gets into the market and with his product or service, and then as there is more acceptance, the company tends to grow. And after a certain level, then the company tends to go to the public, and that this is what is my business like, and based on that, you invest in my company, become a owner or a shareholder, and subsequently, as I will grow as a company, as I will grow, your investments will also keep on growing. Okay, so any company which you feel is a good company. If you look at you all are situated in Baroda, and if you see companies around you, we have classic examples who are companies who have grown through these years, who are listed on the stock market, and that their performance has also been quite exemplary. So the classic example is L&T, uh, and uh, then there are other companies which are listed in that vicinity, uh, like Hero Motocorp, which has a factory there. I've done a presentation there also some time back. So there are various companies you will see which are known in the market, and they are listed on the stock exchanges, and they have provided a good growth to their investors. So my bottom line is that uh, in order to grow your investments, you have to choose your avenues accordingly. And investments, there are three factors which we always have to keep in mind. Uh, how do I do the investment? So that it is, I call it as how, when, and why. How do I do investments? Through through someone I know. When do I do investments? When I have some surplus with me. Uh, and why do I do investments is very important. That today if I have money, if I invest it in future, it will help me in achieving my whatever goal that I have. Okay. So so today, as you are probably going to complete your graduation and would be thinking of your going to the post graduation or thinking of starting a job, uh, you would be getting pocket monies from the house, and in that also you would be saving because as a tendency, Indians tend to save. So start looking at investing those savings, because uh, it is very important to rightly invest the savings that we do. And the sooner you start, the better growth you will get, right? So that is about investment, and that is about what I would say wealth creation. Samriddhi, can you put on the next slide?
Sure.
Yeah. So generally, so in some time you would be getting your first paycheck. It is a great feeling, uh, and we think that if I start earning my own money, I would buy gifts for my family members, or I would go for those shoes, or I would have a party and I will get the latest gadgets and all. So that also one should do. One should enjoy life. But again, as I say, that after doing all these also, we have some savings which are there with us, uh, which we should look at investing. Yeah. So next slide, please. So this is the common thought that occurs, that I've just started my job, or I'm just starting my job, or I'm saving so little. So how would saving that investing that amount help? Another thought is that the common saying is that bada paisa hi bada paise ko खींचता hai. So we will see in this session that that is not entirely true. Small steps can uh, uh, create a big outcome also, right? So, next slide, please. So now, the biggest thing that impacts our life is the impact of inflation. Okay. So, if you're doing savings, but if you're not uh, investing properly, then it will be very difficult to beat the inflation. Okay. So to understand the impact of inflation, you can see, all the prices which were there before 10 years. Uh, if I take example of something like education, the fees that were there before 10 years and the fees that are there now, you will see the difference of around 1.5 to 2 times. If I take an example of IIM Ahmedabad, an MBA in IIM Ahmedabad before 20 years used to cost 4.5 lakhs for 2 years. Today it is 25 lakh plus. Okay, so in 20 years, it has grown by the inflation is grown by 6 times. But if somebody had invested rightly in the right avenue at that point of time, the investment would have grown by close to 18 times. Okay, so the point is that if we invest rightly, if we have a clear view in mind that why I am doing this investment, then it will create that wealth which will help us overcome the effect of inflation on the cost of goals that we are targeting. Because जो भी हमारे लिए important है life में, it has a significant financial impact on us. Okay, you take any important goal, whether it is education, marriage, whether it is creating assets, whether it is going for those vacations, everything in life involves money. So it is very important to channelize that money properly, because a time value of money says that over a period of time, the the value of money tends to decrease. जो चीज हम 100 रुपए में 10 साल पहले ले रहे थे, today we have to spend close to 200 rupees or more on that. The mango season is going on. You can correlate the examples. When you were uh, when you were little, then what was the cost of those mangoes? What is the cost now? So yes, incomes have increased. The gains of investments has been there, but the point is whether I have invested at the right time or at the wrong time. Right. So, so I will keep getting the calls. So my voice might lose out in between. So please bear with that. So the next slide will tell us that what is the impact of inflation. At a 5% inflation, a 1 lakh value becomes 3.4 lakhs in 25 years. Uh, so if you save also, if you save and keep the money in, let's say, a bank account, the bank account would fetch you a 2-3% less return than the inflation which is going on. And to study that inflation, there is a cost of inflation index table by the government which is published every financial year with a base year of 2000-2001. You can refer that table and see the impact of this factor. Okay, so uh, so inflation is going to be there as the economy develops. The inflation may get reduced, but it is going to be there. It is a factor which we cannot ignore, and that is why we have to take the steps accordingly. Next slide, please. So we have what we call as the 50-20-30 rule. Uh, so it says that 50% should be on your groceries and your healthcare and all the expenses to run a lifestyle, and then 30% should be regarding the wants, travel, dining, shopping and all, and 20% by default you should be saving. And I can tell you, and you can go back and check with your parents also, on an average we save 35 to 40% of our net income. Okay, so we are saving well, and that is where what helps us in times of economic crisis. That since there is a tendency to save well, it helps us wait through various crises which are there. So unlike in developed economies like US and all, where it's a spending culture all through, we have a saving culture still, and that is a very good habit. It is just, as I keep on repeating, to invest that savings properly. Next slide, please. So now this brings us to the concept of financial planning. So financial planning is basically planning your finances in such a way that our life requirements get fulfilled on time. So generally, when we talk about financial planning, there is a perception that when we do the tax planning, when we do provisions according to the tax benefits which the income tax allows, our financial planning is done. But that is only just a part of our overall financial planning. Uh, uh, to understand financial planning better, just take a piece of pen and paper, uh, draw a line, a straight line. On one end, write your age, and on another end, write the life expectancy. So let's say today you are 20, 21, and uh, the life expectancy currently in India in urban areas is close to 75 plus. So if I take a life expectancy of 80, so from this 20, 21 to 80, if I write as to what all will be those events which will impact me financially, and what would be the cost of those events today, I will find that there is a lot of action left in my life which needs to be fulfilled financially also. It is personally also important to me. So and it is financially significant also. So it could be buying a car at the age of 25, buying a house at the age of 30, arranging for my post graduation expenses after 1 year. Um, it could be retirement at the age of 55. It could be whole lot of events between this, from 20 to 80. And as you can see on the screen, it is about retirement planning. It is about tax planning. It is about insurance planning. So if I am fit and fine, uh, then everything will be fulfilled. But if something happens to me, then there has to be a proper life cover with me. There has to be proper health cover. Whatever assets that I have. So right now, yeah. So right now, as I was saying, there is insurance on expensive gadgets also. So whatever we have to ensure that it is protected by way of any loss which happens to it. So that is what is called insurance planning. So coming to the principles of wealth creation, uh, uh, it is invest early, start today. As I said in the start, invest regularly. So investment is not a one-off or one-time kind of a process. It is a continuous process. Uh, Life is dynamic, markets are dynamic. So we have to keep on taking stock of what we have done and review those steps and take corrective actions accordingly also. Invest regularly and invest towards specific goals. So these are the three basic principles. Invest early, start now, start today, invest towards specific goals, and invest regularly. Next slide, please. So Albert Einstein was was a very successful and known scientist. Was a very successful investor also, and he has given this quote that compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays for it. So so that means that if we plan for our goals properly and do the investments, then the compounding of that investment will help us achieve that goal. If we don't, then we have to take a liability. We have to take a loan, and on that we have to pay the interest. So it is up to us whether we want to create wealth or we want to create liabilities. Next slide, please. So this is a very pertinent example. Two people are there, 25 years of age. One starts investing at 25 years of age only. Another thinks कि अभी तो मैंने career start किया, let me wait for another 10 odd years before I get settled. And the person B invests for a longer time also, from 35 to 60 years. And the person is invests for only 10 years, 25,000 rupees. So person A invests in total 30 lakhs and person B invests 75 lakhs throughout the tenure. The corpus that gets built at the age of 60 is 9.5 crores for person A and 4.26 crores for person B. Right. So what does this say? That assuming a return of 12%, which has been delivered in the past over this period of time, in fact, more only. Uh, uh, so if we start early and if we stay long and invest for a lesser amount of time, also the compounding effect helps us grow our wealth tremendously. So if I take in this example, somebody is starting at 45 or 55, the corpus will be much lesser. So as I was saying that avenues like mutual fund SIP, start now. You can start SIP with as low as 100 rupees also. It gets deducted monthly. There is a discipline which gets built into it. And after 5-10 years, you will realize कि ये छोटा investment जो मैंने किया था, it has turned out to create this corpus which I can use, right? So recently, one of my colleagues bought this iPhone 13. So we had done some SIPs of 1,000 around 6-7 years back, which had accumulated a corpus. And he suddenly realized, this is the investment that I had done. And he wanted to buy a new phone. So he could utilize that amount in buying that 1.5 lakh kind of a cost of the phone. So that is how it helps, right? So uh, this is about compounding and about starting early. Next slide, please. So investing regularly. Why investing regularly? Because as I said, market is dynamic. Uh, every now and then there are different levels which are there in the market. So when we buy at low levels, we get more units. When we buy at higher levels, we get lesser units. But if we continuously invest, we get the benefit of averaging. And there have been various studies also, and there are various data also to prove that if we invest regularly, after a period of more than 5 years, it tends to the average cost tends to be far lesser than the market price, and buying at different levels gives us that risk management which one requires in a market-based instrument, and it is lighter on the pocket also. So if somebody has started earning, let's say, 20,000 rupees and starts with let's say 2,000 or 5,000 rupees of a mutual fund SIP, it will keep on buying every month at different levels, and it will help create a corpus. It will be lighter on the pocket, and the cost averaging benefit also will accrue to that investor, right? So if we want to build wealth, we have to be very clear that we have to be an investor. Right? So there's a difference between trading and investment. Okay, so trading is always for the short term. Investment is always for the long term and with a clear objective. Next slide, please. So first was invest now, second was invest regularly, and third was investing towards specific goals. So in this also we will give an example in the next slide. Next slide, please. So we see there are two goals which are there on the screen. One is your child graduation. The cost is 10 lakhs today. With inflation, it will become 20.1 lakhs after 15 years. The amount of investment which is required to fulfill that goal is 4,400. And the second goal, the cost is 6 lakh today. After 5 years, it becomes 7.6 lakhs. The amount of investment required monthly is 9,400 approximately, right? So we can see from this example that the point which I was talking about, that small amount can also help us achieve a long-term goal of a bigger value. So in this, the amount required in for investment per month in the first goal is less than half of the amount required per month in the second part, second goal, right? So the nutshell is that we should be investing, whether it is for 5 years, 2 years, 1 year, 10 years, 30 years, but we should be doing that activity, and we should be taking those steps to do the investment, right? The longer horizon we have, the better benefit we will tend to get. Right? So next slide, please. So this was about investment planning. Now comes insurance planning. As I told you, insurance is to ensure that whatever assets that we have, we the loss of it will create an emotional impact, but we have to ensure that the financial impact is as less as possible, right? So there are broadly two areas in this: life insurance and non-life insurance, right? So life insurance is about the human life value as an asset. If the person getting insured is the main earning person of the family, then if something happens to that person, the family will be suffering emotionally and financially also. If there is a right life cover, it will help lesser the economic burden or the financial burden on the family. Uh, so there are various options in this. There is term insurance, which is pure insurance. Then there is endowment based insurance, that if we survive that insurance policy term, then we get the benefits of whatever we have put in the money. So there are various options or solution designed according to various objectives which could be there for a person. For if you are taking any loan, we should ensure that there is adequate insurance taken against that also. Uh, any asset which we see in front of our eye, whether it is vehicles, whether it is our home, factories, everything should be adequately insured, such that uh, in the case of any loss of that asset, the adequate financial compensation is there, right? Health insurance, as you can see, there's a lot of inflation in the medical field. So any hospitalization in a decent hospital tends to invite a lot of cost. So one would wish that that does not happen, but in case that happens, if we have adequate medical cover, then it will again offset the financial costs which are there in the treatment. So so as I said, insurance planning is all about life as an asset and all the non-life assets that we have with us. Next slide, please. So there are some rule for calculating the insurance cover required. The thumb rule is that 15 to 20 times of your income should be the insurance cover. Then there are expense coverage and income replacement methods which are there. Which basically is about that if something happens to the main person of the family, will the expenses take get taken care with the inflation factor added to it? If something happens to the main member of the family, will the cover provide the required income replacement or not? So there are ways to calculate that the required insurance cover. Next slide, please. As I said, then health insurance, again, very important part. So in that there are various options. Companies also provide group insurance policies to their employees. One should have a family floater medical insurance policy at any point of time, which covers the entire family. Then there are top-up plans, which we can add to the main policy. So these are the various options in the health insurance space. Next slide, please. Now comes the part of the retirement planning. So many of your parents would be like close to 10 to 15 years to retirement. How things change in retirement is that the prior to retirement there is a continuous income flow which stops after retirement. Also, one would feel that at certain age, I would like to be financially free, and for that, I should have enough corpus with me to sustain my post-retirement period. So what is happening is right now that people are retiring at 55, 60, sorry, and retire and living till 80, 85. So that post-retirement life has increased, and now people have become more financially independent. So because of that, they feel that they would not like to be dependent on their kids towards the post-retirement phase. So prior to 30, 40 years, the system was that a family would have 5, 6, 10 kids, and after retirement the parents would be living with each of the kids are 2 months in a year. Now the situation has changed completely, and now the people who are retiring are financially well off also compared to earlier, and they would be they would prefer to be financially independent throughout their life. So for that, it is very important to estimate as to what the fund or the corpus would be required at the point at the time of retirement. So to accumulate that corpus, one would have to start investing on a regular basis, as we would see from the example going forward. Next slide, please. So here we see an example that a person is earning 10 lakhs right now, and if we estimate a growth of 10% every year on the income, at the age of 60, the possible retirement age, the income would be 1.14 crores per annum. And if I take a income replacement ratio of 60%, then the income required per year would be close to 1 crore. So at the age of 60, this person would require a corpus of 13 crores, such that if it gives an annuity of 8%, it would be this 1 crore income would be sustainable through the life till 80 years, right? So this is how the retirement impacts us. Next slide, please.
Hello. I think there is some problems.
Yeah.
Yes.
Sir, are you there?
Hello.
Sir, your voice is
Yes, sir.
breaking.
Just a moment. Hello, is it audible now?
Yes, sir.
Yes, sir.
Hello, can anyone confirm if my voice is audible?
Yes, sir. Your voice is audible.
Okay. So I was saying that this is an expense protection method that if the expense is 5 lakhs at the age of 60, the same 5 lakhs becomes 21 lakhs, and you require a corpus of 1.6 crores to maintain that lifestyle till the age of 80. So the point is, through all these examples which we gave in earlier in the invest early part also, or the retirement part also, it the bottom line is start now. As such, you are investing. You are not spending per se. So depending on the goal, depending on the term of the goal, depending on the criticality of the goal, there are various instruments on the equity side of it, on the fixed income side of it, on the gold side of it, which can be looked at. The asset allocation can be looked at. It is very, very important that we start working on it and keep on tracking it regularly, because it is always in life also that if we plan well, the chances of deviation from the expected outcome are far lesser than just going in for the task. So if I have to go from here to Delhi, and if I plan well in advance and book the tickets, I will get a better deal than I will have, which will have various properties that into it in what all will happen going forward. And if we write the financial implications of it, we can utilize our resources uh, better and make them work for us. So right now, all of you would be entering into the job world, as to say, some of you may be thinking of starting your own business. So basically, each one of you would be thinking of making your own money. Uh, uh, that this thought should always be there, that whatever money I am making, and I'm working so hard for making this money, I ensure that today I keep on investing in the right way, so that this money works for me in the future. So that is the basis of financial planning, wealth creation, and all. Right. So next slide, if you see, it is about next slide, please. Yeah. So it is about start early, start now, set measurable goals. Do not wait for an investment planning till a financial crisis arrives. So this is a common error which is done. That that event comes in front of us, and then we realize, अरे उस time पे कर लिया होता तो ठीक था, right? And start with whatever you have. So this is from practical experience. Whatever you have, 500 rupees, 1000 rupees, just invest. Don't assume investment planning is only for the super rich, right? And engage with somebody who knows this field. It could be someone whom your parents are consulting. It could be somebody like ICC Direct. But as the Nike tagline says, just do it, right? I started my career in 2002. There was a friend of mine who made me do 2000 rupees SIP because he had a target. He was working with Kotak Bank. That SIP, and at that time my salary was not that great. So still I did it. I ran it for 2.5 years. I saw amazing returns which I had not seen in my lifetime, because my father used to do only FDs. So I saw a 20%, 25% kind of CAGR, and then I liquidated all those investments, seeing that return that ये वापस तो इतना return मिलना possible ही नहीं. Had I stayed on with those investments, because that corpus I was not requiring per se at that point of time. So today that 2,000 rupees would have created a corpus of close to 20 odd lakhs, right? So so that is what it is. Whenever you are taking that step, be very clear in that mind that what is the horizon that you are doing it, and if you do that, it will certainly benefit you. Markets, as life, will always be choppy, will be volatile. But if you see a longer term, 5-7 years plus, and you all would agree कि एक decade निकल जाता है, and it's like अरे एक decade निकल गया. So 2010 से 20 हो गया. It is like the time has gone, right? So just do this activity, stay with it, and you are sure to reap the benefits. No asset class is good or bad. So it is not that FD are not good, or gold is not good, or real estate is not good, and equity is only good. All asset classes have their unique points. So the fixed deposits and all are for parking your money for a shorter horizon, and earning a better interest than the saving account. Equities are for the long term. Gold is a hedge against inflation, and real estate is something which we always look forward, because one would like to have a property of one's own uh, at some point of time. So all our opportunities, all our vehicles of investment, which are required for reaching our particular destinations in this journey called life, right? So this is all I would like to convey. Uh, it is actually a very simple process, but it is something which is still not looked at seriously. We can see that it is impacting our life throughout, but it is still something which we don't consider as important. It is rarely discussed in houses. So अगर आपके फादर ने या आपके पेरेंट्स ने कुछ इन्वेस्टमेंट किया होगा 10 लाख एफडी का, तो that would not be discussed. But if one is buying a TV in the house, there would be a overall discussion at the dining table कि कौन सा लेना चाहिए, Sony लेना चाहिए, Samsung लेना चाहिए, what is the budget, and all those things. So my limited point is that discussion बहुत कम होता है regarding investment or financial planning in the houses, and that is why it does not seem important, but it is the most important thing as far as our life is concerned. Again, I'm repeating, I'm not saying that you compromise on your lifestyle, but as such, we are a savings country. So utilize those savings wisely, invest in the right avenues, and you are sure to benefit in this journey called life. So this is all I would say. So now, if there are any questions, I would be happy to take it.
So thank you, sir, for sharing a wonderful knowledge to our students. So some of our students have queries, and I would like to call Hatim Madhwaswala, BCom students. He is from marketing field. He is having a marketing specialization. Hatim, you can ask your question. Hatim, you unmute your mic. Hatim, can you hear me?
Yes, sir. Yes, sir.
Okay, now you can ask the question.
Yeah. Hi.
Hatim, your mic is mute.
Someone starts late and doesn't invest so much. How can he build a?
Come again.
Hello.
Your voice is not audible. It's breaking.
Hatim, unmute your mic first. Can you hear me?
Or if you can put it in the Q&A box or something, that also is, I think.
So we have another student, that is Mihir Patelia. Mihir, can you hear me?
Yeah.
Okay,
Yes,
you can ask your
sir.
question.
Hello.
Yes.
Sir, am I
hi,
audible?
आपका भी आवाज
Yes, sir.
एकदम
Hello.
lag हो रहा है.
Your voice is breaking,
हाँ
Mihir.
बोलिए.
Sir, I am audible clearly.
Somewhat, please. Please go ahead. No, not audible at all. Not audible at all.
Hello, sir.
If you can write in the chat. Yeah.
Okay, so you can write your questions in a chat box, Mihir. Atin, you can also write your questions in a chat box.
You
Your
about
voice is breaking, Mihir. Your voice is breaking.
Please write in the chat box.
the principles of investment, right?
Yes. Now
Yeah.
you are audible.
Yeah, now it's better.
Yes.
Yes.
Mihir, you can ask your question. There is one query from Rizwan. Can you see the chat box, sir?
Yeah, I can see. So he's saying, myself Rizwan, hi Rizwan, I got a question. What are the 4 basic types of insurance and why is estate planning important? Okay, so good question. See, types of insurance, I would say basically there are 2 types. If you want to have a simple classification, there are 2 types, as I was told. One is life insurance and another is non-life insurance. Okay. So in life insurance, there are various types. So there is a term insurance, which is a pure protection. You pay the premium, and if the policyholder, meets with an unfortunate event, then the nominee gets the life insurance cover. Then there is unit link investment plan, wherein the premium part of the premium is invested in various funds, and if the policyholder survives the term, then the uh, the investment also grows, and that benefits also is there. And third is a traditional endowment plan, which invests in traditional instruments like bonds and all. So yeah. So these are the basically 3 types of life insurance. And in non-life insurance, anything that you see in front of your eyes, anything, whether it is your office, house, health, your your car, your bike, anything which is there is covered in insurance. So we have to always remember that insurance is for financial compensation of the asset, in case there is a loss of the asset. So if we have a car, it meets with an accident, then the damage that has been done, there is a financial compensation after assessing the damage, which is given to the policyholder to get their thing repaired, right? So basically there are life insurance and non-life insurance. These are the 2 basic types we should remember. Estate planning is basically a part of financial planning. What it says is that over a period of time, in my name, I have created so many assets. So after I am not there, how these assets should be distributed to whomsoever I wish to distribute. So we would be knowing the term called will, right? We've seen in many movies that the entire movie is on will only. So if you've seen the movie called Taxi Number No Do 11, it is all about the fight over the will specifications, right? So the will is a document wherein I write that these are the assets in my name, should distribute it accordingly. So estate planning is basically planning how do I distribute my assets after I am not there, right? So I hope this answers the question, Rizwan. Right. So
Sir, there is a next questions from
next.
Mihir Patel.
Mihir, so Mihir has asked a question. You talked about third principle of investment that says we shall invest towards specific goals, and you also explain types of goals. Can you please elaborate how can we prioritize our goals on different circumstances? Very valid question. So goals are basically divided into two parts. One is negotiable goals and another is non-negotiable goals. So what are the non-negotiable goals? Education is one. Okay. So if I completed school, I would. Then there is retirement. Then there is possibly it may not be a non-negotiable, but from a parent's angle, a marriage could be a non-negotiable goal. 27 के हो गए 28 के हो गए, now you should get married types. So each individual situation is different, and according to that, the prioritization needs to be done. So for somebody, buying a house would be the most important agenda. For another, it may not be that important. Okay. So the key thing is to jot down those goals, have a clear view of those goals which are likely to happen in the future. So for that, you can do this exercise, draw line on the paper, write your age on one side, write the life expectancy on the other side. So from 20 to 80, what are those things that I want to do financially? When I would want to buy that car, how important it is for me to buy that car.
Hello. Sorry, your voice is breaking.
Yeah, I got a call, sorry.
Yeah.
So that is where you need to jot down those goals and then prioritize accordingly. So for each individual, the priority would be different according to the situation that individual is in, right? So that is how. But it is important to first have a clarity of the goals that we are thinking that will come. So how can we determine our risk tolerance? So there are questionnaires which are there in which your financial risk profiling can be done. Uh, so we have such kind of tools with us at ICICI Direct. You can find it on the net also. So it is a combination of ability and attitude towards risk. So ability is that what is the income structure I am in, how many dependents I have, how many years to retirement I have. And attitude is basically if I have 1 lakh rupees to invest, how much fall in that investment value will be there, which I can handle. So it's a combination of both, and there are questionnaires wherein you can look at assessing the risk profile. So that was a question from Varshil. My question is that there are what are the major sectors which we have to look after for investment for getting good return in future? What we advise is that a combination of sectors. So as I said that Nifty is basically a combination of sectors and stocks. The topmost is banking and financial, then it is IT, then it is oil and gas, and then it is FMCG also. So it is always advisable to go through a professional investment route like mutual funds, and in that select that category of mutual funds which would be having all these important sectors in them. So there are sector specific funds also. But my advice would be when you are starting your investment journey, there is a category in mutual funds called the flexi cap mutual funds category. So in that, as the name suggests, it is flexi cap, okay, which invest in all the sectors and all across sectors and across stocks, right? So go with that kind of an option which for consistent returns. So more than high returns, we should look at consistency in returns. So I would suggest to go in a diversified way through a mutual fund route, and in that through a flexi cap kind of a category. So I hope Aryan, your doubt is clear. So right now we are bullish on banking. If you want to know the name of sector, so banking and financial services, we are bullish. But I would still say that since you are starting your investment journey, go through a proper diversified route through a flexi cap kind of offer.
So I think enough questions, solved, the doubts solved by the Pawan sir. So,
Right.
Samriti madam, can we end this session?
Yeah, sure, sir. So, thank you, students, for your participation and listening the entire session very patiently and asking your doubts. I'm sure it will help you in your future prospects, and I hope you will get the insights of market, that how market works apart from the theoretical knowledge that you are gaining from your faculties and from the college. So, we'll conduct such kind of rounds for you in future as well. Right now, it was just a virtual session. We just want to pilot this, and in future we'll come to your premises and we'll have a physical round soon with all you and having an interactive one. So thank you, Jignesh sir, for having us today, and thanks for providing us the opportunity to conduct this session. Thank you, everyone. Thank you,
Thank
Pawan
you,
sir.
madam. At last, I would like to propose a vote of thanks. It's an immense pleasure to propose a vote of thanks on behalf of all students, staff, Department of Commerce, and Parv University. I am glad to be standing here to express my vote of thanks. A special thanks to our chief guest and the guest speaker, Mr. Pawan Bhutt sir, and Mrs. Samriddhi Mehta for coordinating the events and for accepting our invitation and for being here with us to NPU webinar series. Your thoughts and rich knowledge have truly inspired to our students and staff. So thank you very much, sir, and thank you very much, ma'am. Thank you so much.
Thank you, sir.
Pleasure is all mine, and I hope you all take that first step. Thank you.
Yes, sir.
Yeah.
Thank you, sir. Thank you so much.
Bye.